Okay, well, hello everyone, and thanks for coming to this Orbex live market analysis session. And over the last year, there have been no shortage of key political events fueling volatility in FX markets, and already 2017 is shaping up to potentially be just as volatile. Now, the first event on our radar is, of course, the upcoming French elections, which will see the first round of voting on April 23rd. Now, if you follow the blog regularly, you'll no doubt have seen that we've been running weekly updates on developments with the candidates and their campaigns, updating polling odds, and also talking about how the markets have been and could be affected by developments. So in this session, obviously just a few days out from the first round of voting on April 23rd, we're going to give you a final overview discussing the importance of these elections, looking at who the key candidates are, what the main issues are, talking about how polling odds are forecasting the voting, and then also looking at potential scenarios that could play out in the currency markets depending on how the voting goes. So as ever, if you have any questions during the session, please just make sure to write them in the chat function, and I'll try and stop periodically as we go along to answer them. So first of all, why are these elections so important and drawing so much attention from the market at the moment? Well, aside from deeper issues, which we'll get onto shortly, the first reason is simply the scale of France's economy within the EU, which represents around 15% of European GDP. So France actually holds the third largest economy within the EU, and obviously once Britain leaves, France will become the second largest economy. So France is clearly an important economic player in the EU, but it's also a key political player too. France elects around 10% of the 751 seats in European Parliament and has 29 of the 352 votes held in the EU Council of Ministers. So obviously a change of leadership in this country then could have a serious impact on how broader EU decisions are made, which can obviously affect the EU economy and ultimately act as a catalyst for ECB monetary policy decisions. Now, the more important reason why these elections are being so closely watched is linked to the specific candidates that are running for presidency and the issues and policies being discussed. And the key one, of course, is the risk of a French exit from the Eurozone. So to talk about why this is a risk, we'll run through the candidate profiles then and talk about the key policy points that each candidate holds, starting with the far-right candidate, Marine Le Pen. So Marine Le Pen then, the leader of the National Front Party and actually the daughter of the founder of the National Front Party. She's a Eurosceptic who, if successful, has pledged to hold a referendum on reintroducing the franc. Now, her other campaign pledges have centred around urging the use of state intervention in the economy with greater control of policies aimed at stimulating national industry, taking measures to reduce bureaucracy and cut down on welfare dependency, helping France to take control of its borders, and also returning to the currency snake system used by EEC members in the 1970s to regulate exchange rates between national currencies. So Le Pen has received a great deal of support, mainly from working class voters who have fared badly under the rising levels of unemployment seen over recent years. Now, Le Pen's economic policy has strong protectionist overtones, and the risk of a French exit from the euro is the key risk that is linked to this election. And this is what everybody is focused on at the moment, whether a Le Pen victory will see France withdrawing from the euro and indeed the eurozone. So the next candidate then is Emmanuel Macron, who is a left-leaning centrist candidate. He's the former economy minister in the Hollande administration. And Macron's key policy points are aligned around increasing the 35-hour work week, calling for flexible retirement ages and allowances for some workers, suggesting that stronger nations within the Eurozone make budget transfers to other countries to promote financial equalisation and wanting to appoint a Euro Commissioner in Brussels to coordinate the economic and social policies among the 19 Euro countries. So the next candidate then is Francois Fillon, who is the leader of the Republican Party and is seen as a centrist candidate. He actually served as economy minister in the Sarkozy administration. Now, Fillon's campaign is based around the following policy points. So first of all, reforming French and European labour codes and increasing the working week, slashing more than 100 billion euros from the budget while also reducing the federal payroll by 500,000 government employees. He's also looking to boost the employment rate and cap unemployment benefits, enact stricter immigration controls, increase the retirement age to 65, reduce taxes on companies and the wealthy, along with taxes on the middle class over a period of 5 years, increase security and defence spending, and then also reduce the size of the state. Now, Fillon started well in the race for the presidential election, but has been hurt by scandals aligned specifically to the alleged payments made to his wife for fictitious work. Now, Fillon's stance in favour of austerity could have repercussions not just on the domestic budget, but also on wider European fiscal and monetary policy due to his say in future appointments to the ECB and EU Council of Ministers. So the next candidate then is Benoit Hamon, who is the leader of the Socialist Party and has been dubbed the French Jeremy Corbyn for those of you who are familiar with the UK Labour leader. Now, Hamon's policy points are aligned around creating a universal income, reducing the working week, reducing the power of the executive branch, giving more power to Parliament and increasing the public's involvement in politics, legalising cannabis and euthanasia, and also opposing bans on the wearing of burkinis. Okay, and then the final candidate then is the hard left candidate, Liu Melancon, who is the head of the French Unbowed Party. Melancon broke with the Socialist Party in 2008 and represents the hardest left candidacy in the race. So Melancon's policy points are aligned around ceasing negotiations with the US on a free trade deal and rejecting the CETA deal with Canada, withdrawing from NATO and the World Bank and refusing any permanent military position unless backed by the UN, developing closer ties with Russia and also negotiating the democratic reconstruction of European treaties. So clearly Melancon's campaign is directly at odds with far-right candidate Le Pen's, and also the hard left leader has stated that he is at ease with France being an ethnic melting pot. So these are the 5 key candidates then in the 2017 presidential elections. Now, the way that the French electoral system works is that if neither of the main candidates receives a majority of over 50% in the first round of voting on April 23rd, then the voting will go through to a second round, and the second round will be held between the 2 winners of the first round. So the 2 candidates who get the most percentage of votes will go through into a head-to-head in the second round. Now, with just under a week until the first round of voting begins, the latest polling results are obviously starting to get more and more attention. So let's look at how the latest polls are forecasting the results. Okay, so importantly, over the last month, each poll has actually pegged Le Pen and Macron as the top 2 candidates at around 22 and 23% of the vote each. So with this amount of voting, both of these candidates would go through into the second round. So the second round would become a head-to-head between the centrist Macron and the far-right Le Pen. Macron is then forecast to win in the second round at around 60% to 40%. However, notably, over the last week, polls have seen support for the front runners actually slipping back, while support for Fillon and Melancon, who are the two closest runners up, have actually seen an increase in support. And so all four of these candidates are now within roughly 4% of each other in the latest polling results, essentially meaning that instead of there being two clear favourites to win in the first round and go through to the second, there are now four broadly equal candidates. So the key risk here is that given the recent surprise outcomes in both the Brexit referendum and the US elections, where polling forecasts got it completely wrong, markets are wary of the margin of error in these samples, which could quite easily once again turn out to be wrong. And in fact, an issue which is complicating the issue further and increasing the risk around the event is that of voter turnout and abstentionism. So polling agencies have been including the option of an abstentionist or protest vote, which is essentially a vote which goes to neither of the candidates. And currently around 25% to 30% of those polled have registered this option. Now, on top of this, another 25 to 30% of those polls have registered that they are as yet undecided. So clearly this presents a high level of risk for an unseen victory for any of the candidates, where there could be a sudden swing of support within that portion of voters who are as yet undecided. So that's the key risk here regarding the level of undecided voters as regards polling results. Now, voter turnout for this election is also expected to be historically low at around 60 to 65%. And this adds further risk because Le Pen is expected to be the biggest beneficiary from low voter turnout. So polls on voter certainty, which essentially asks those polled how sure they are that they will actually vote for their chosen candidate. So these polls have seen the highest scores for Marine Le Pen at around 80%, which means that the lower number of voters who actually turn out and vote, then this increases the chance that there is a greater percentage of them who will be voting for Marine Le Pen. So the narrowing of support for the two frontrunners over the last week is a clear reminder of just how important these last-minute swing votes can be. And again, the high level of undecided voters and abstentionist voters means that this could be another political event which sees a major upset. And obviously, the risk of greater repercussions here in terms of France exiting the Eurozone make this a particularly volatile and important event. So with that in mind, let's now consider how we can actually trade the various outcomes and scenarios which we might see on the back of that vote. And the first thing to point out is that unlike the key political events that have taken place over the last year, so specifically the Brexit referendum decision and the US elections, the exit polls from this vote will be released while the market is closed on Sunday evening, okay? So those polls that are taken as people are leaving the polling stations, asking them how they voted, unlike with Brexit and the US elections, where they were trickling in over the night during live market hours, this time these polling results will be coming in on Sunday evening, roughly an hour before FX markets open in Sydney. So this means that there will be plenty of time for investors to digest the exit polls. Now, in terms of how significant the market reaction is likely to be once markets actually open, well, this is likely to depend on which of the candidates makes it through to the second round and by what scale. Now, the key event which will drive a market reaction then, so the event that is likely to drive the biggest market reaction will be if we see a clear polling surprise or an error, as we saw with Brexit and with Trump's election. So with polls having consistently shown Macron and Le Pen to be neck and neck, and Macron forecast to win with Le Pen expected to be second, if this turns out to be wrong, so if the vote proves these polling forecasts wrong and we see markets react, we're likely to see markets react aggressively is what I'm trying to say. So if Le Pen gains more than the expected 25% of the votes in the first round, then the euro is likely to trade sharply lower as investors begin to price out a Le Pen victory in the second round. If if Le Pen wins more than 25% of the vote, euro is likely to trade lower as investors begin to reprice a Le Pen victory in the second round. However, if Le Pen gets less than the 25% of the votes which she's expected to, then the euro is likely to trade higher as voter uncertainty decreases. Now, going back to the issues that we talked about earlier regarding the high level of undecided voters and the potential for an unseen swing in support, well, if Le Pen comes out on top in the first round of voting, then that is going to really spook markets, and the euro is likely to trade sharply lower as investors begin to reprice the second round of voting. Okay, so as it stands, the broad expectation is that Macron and Le Pen are going to go through into the second round, and Macron is expected to be ahead of Le Pen. So if we see any difference in that, if we see another candidate go through instead of Macron, and especially if we see Le Pen going through into the second round ahead with around 30% of the vote or more, then this is going to really spike investor uncertainty and send the euro lower. Now, given the level of expectation in the market, it's more likely at this stage that we see greater magnitude in downside moves on a better showing for Le Pen than we see in terms of upside moves on a victory for Macron. And in fact, if we take a look at institutional positioning here, so you can see that we have a visual graphic of the COT report which shows how investment banks and financial institutions are positioned in the market. You can see that the current state of the market reflects that the extreme level of euro short positioning, which had been at record levels just 2 years ago, has now come all the way back up to just below neutral levels. Now, a combination of fading ECB expectations, easing expectations rather, and stronger EU data have supported a steady squaring of short positions, and so it's quite possible that a win for Macron in this election could be enough to fuel a shift into net bullish positioning, which would actually be the first time that institutions had been net long the euro since 2014. So you can see that the yellow line here is showing price, and then the shaded area is showing positioning. So all of the shaded area above that zero line is showing you where institutions have been net long, and then you can see at this point here in early 2014 when net positioning crossed to the downside, and then we saw that huge decline in the euro. Now, after bottoming out in 2015, positioning has been making its way steadily higher, and you can see that although the euro has still been roughly grinding downward, it has absolutely none of the momentum that it had over that 2015 and early 2014 to early 2015 decline. So at the stage that we're at now, if we do see a win for Macron and we see the euro avoiding a Le Pen victory and the possibility of a French exit from the euro, then this could be the catalyst for a shift into net bullish positioning, which could obviously be the start of a new bullish phase for the euro. So a win for Macron in this election would be viewed as keeping the EU economy on track and supportive of eventual removal of QE by the ECB and a return to a tightening cycle. So let's take a look at the charts then, and I'll walk you through the setups and the key levels that I'm watching in certain pairs. Okay, so kicking off with the euro then, and you can see that we have three clear perspectives highlighted on the euro. So the longer term bearish channel, which is shown in yellow. We then have the medium term bearish channel, which is shown in purple, and then we have the shorter term bullish channel in green. So the shorter term price action is clearly corrective to the medium and longer term price action. So you can see that we just had a spike higher here recently. If I zoom in on the euro, we had a spike higher in the euro which came on the back of another strong CPI figure, which is further supporting markets' expectations of a shift in bias by the ECB. So for now, the key levels that I'm monitoring are in fact these trend lines. So you can see that we've recently found support at the rising short-term bullish trend line. And so while this bullish channel remains intact, price action is likely to make its way higher. And the key resistance I'm looking at in the short term is the apex between the short-term bullish channel and the medium-term bearish channel. So if we get a spike higher here on a Macron victory, this is going to be the area where I'll be watching price action for a potential short setup. Now it's going to depend obviously the magnitude of the rally we get, because it's quite possible that we could blow through this level. But if we simply get another laboured leg higher into this zone, this will be a key area to watch. Now to the downside then, if we see a surprise and Le Pen gets more votes than expected in the first round, or indeed comes out on top in the first round, then we're very likely to see this short-term bullish channel give way, and the target on that move will be a return to a retest of the longer-term bearish channel low, coming in at around the December 2016 low. So we've got the 103.40 level is the December 2016 level, and then you can see that we have that bearish channel support coming in just beneath. So the story for the euro at the moment is a very structured, very clear one. We're simply tracking this corrective bullish channel higher and expecting at some point that we're likely to test this resistance level, which will be a key decision point. So above this resistance level, the next price level that we'd be looking at would be a move back up to test the bearish channel, the longer term bearish channel resistance. Alternatively, if we see the euro spike lower on the voting results on April 23rd, then we're going to be monitoring a retest of this downside level. And obviously this will be a big range low retest in the euro. So it'll be very interesting to see the price action that we get there, whether we form a double bottom and look to rotate higher, or whether in fact we break beneath and mark a bearish cycle. Now obviously the positioning data that we just looked at in the euro shows that there has been a massive reduction in shorts. So although it is true that positioning is returning to near neutral levels, what this also means is that if we see a big bearish catalyst in the market, such as a victory for Le Pen, then what that means is that institutions have plenty of scope to re-establish their short positions. As you saw, those short positions have come all the way up from their 2015 lows. So there's plenty of room for institutions to pile in and drive the euro lower. Now on that note, if we do see a stronger showing for Le Pen in the first round of voting and the euro does sell off, the move is likely to be most pronounced in the euro-yen pair, because the consequent rise in risk aversion is going to support a safe haven bid for the Japanese yen at the same time that investors are selling the euro. Now you can see here actually, if we drop down to the daily charts quickly, that this is a theme which has already been playing out in the euro-yen over the last few months. You can see we've had a steady sell-off, and in fact we've just recently broken down through that rising bullish channel support from last year's lows. So at this point, what I'd be expecting here is that if we get a retest of this broken rising channel low, that this is likely to hold and drive the action further lower in euro-yen. Now, looking at the bigger picture in euro-yen, if we go back to the weekly, you can see that we've got some nice symmetry playing out currently between this retracement leg and the retracement leg that we saw here. So you can see that these two moves have been of equal size, which would suggest that we're about to see another leg lower in the euro-yen. And if we do, we might expect that leg to be similar to this initial decline which started this bearish move. So this would give us a nice 5-wave move down into a target of roughly the March 2012 lows. So we'll be coming in at around 157 with the March lows at 95 level. So this is an idea which I'll be keeping an eye on then, because if we do see a euro sell-off in response to the voting, as I say, it's likely to be most pronounced in the euro-yen. And looking at the price action and the way that this symmetry is lining up, this also supports this idea. So having that in mind, that we could break down through the current 2016 lows, then we'd be targeting a move 800 pips lower down into the mid 100 level. Similarly then, in euro sterling, you can see that we've recently broken down through two key bullish trend lines. Now, sterling is currently benefiting from a surge in strength linked to UK Prime Minister May's announcement of an early election being held in June. So euro sterling is currently sold off through these key trend lines, and we're sitting on local structural support at the December 2016 low. So a break below this level then would open up the way for a retest of the pre-Brexit highs at around the low 81s. So again, another downside scenario here, and the reason why I've highlighted more downside scenarios is simply because of the level of market expectation, and considering recent political events, the bigger opportunities appear to be to the downside at this stage. Okay, so I highlighted the fact that there's a large portion of undecided voters on the docket at the moment, and the potential for a last-minute swing in support towards the far-right candidate Le Pen would have an extremely negative impact on the euro. Whereas if Macron wins, as is broadly expected, the relief rally that we see is likely to be small, and focus will then return to underlying fundamentals such as judging the weekly economic data and gauging the ECB monetary policy response. So in terms of thinking about risk, reward and opportunities, the surprise element here presents the biggest opportunities to the downside. So that's why I've been looking at these more bearish setups, because if we do get a surprise to the downside, the moves are likely to be of quite an extreme magnitude. Okay, so I hope that everyone's found that really useful and you understand clearly the different issues which are at play here, but more importantly, the way that they could affect the markets, the way that these different scenarios and situations could affect the markets. Now, are there any questions that I can answer just before we wrap up? Okay, great. Well, best of luck to everyone trading this event. It's certainly going to be a very interesting event and has the potential to be a pivotal moment for France and the Eurozone. And we will, of course, update you next week after the first round of the voting to see where we stand and who's made it through to the second round and take it from there. So we'll reassess these trading opportunities and the setups that we've looked at, and we'll also update on those on the voting results rather, and how that's going to affect the outlook going through over the next couple of weeks into the second round of voting, which will be held on May 2nd. Okay, well in the meantime, thanks a lot for joining me everyone, and I look forward to catching up with you all next time. Thank you. Great, cheers guys, thanks a lot, take care, bye.